Well, good afternoon, everyone. It is great to be here with you again. I know we had some time where we were waiting on Congress to get something done as related to COVID, so we've missed you all, but are happy to be back with you today. And of course, it's 2020, so we now have a bill we're going to talk about that is not signed yet, as you've been watching in the news, but we still decided to bring it to you. So of course, this disclaimer slide is going to be more important today than it ever has. The information we're giving you is based on the bill that they put out that Congress, both the House and Senate passed, but that President Trump has not signed. So know that what we go over is just initial thoughts of ours from the bill itself. It could change and very well might based on some of the things you're seeing in the news, but it also will have a lot of interpretation that'll come out after the fact when it does get signed. So we'll jump into what our agenda is going to be today, and I will never mind. I forgot I need to tell you who I am. I forget. I've been with you all so often. You need to know the team. So on behalf of the COVID team and the partners at Boyum and Barenscheer, we want to welcome all of you here with us today. So I am Stacy Shaw, partner in our business advisory services, and I have a nice, great group with me again. Chris Whittick, who you will see in the last part of the presentation, is our, you went back one, Chris, is CPA and MBT. So he's our tax guy that gets super excited. And then with us, we also have Nick Swedberg, who is the MC, who will come in and go over some housekeeping items. He's also in the business advisory services group with me. Behind the scenes, quickly answering questions for you will be Barb Soddy. She is also in the business advisory services area and is the specialist in the payroll area as we move through the COVID items. And Randy Feld is here helping with all the loan items and the accounting needed as it relates to all the PPP items. He's in our audit and accounting area. And Tiffany Shermack also with us from the audit and accounting area and is PPP everything. So many of you have probably already talked to her, as well as Larry, who is going to be with us also from our audit and accounting area, who is helping quickly, fast and furious with now the forgiveness applications, and will also be here answering questions and helping with the new applications. So with that, we'll go into our agenda and I will kick it over to Nick to give us some housekeeping items.
Thank you, Stacy. And like she mentioned, just hello, everybody. We actually missed you quite a bit. We have been preparing for this webinar since the bill passed, or since we saw some drafts of it Monday morning, and we're all have been waiting anxiously to do another webinar with you all since May, practically. It's been way too long. Just very briefly, like before, on the bottom of your Zoom, there is a Q&A section where you can post questions, and also there's a thumbs up button next to questions. If you could try to look through and see if your question's already out there, give it a click on the thumbs up. That will let us know that more than one person has that, and it'll raise you to the top. So there's a very good chance those will get answered. And like Stacy mentioned, there is a group of us behind the scenes. We will be answering some one-off or more specific questions as we go, and some will be holding until the end for some Q&A to answer the best that we can in this ever-changing PPP environment. And as you can see, here's our agenda. It is chock full of good information. So we'll just, and the slides and this webinar is being recorded and will be up within about 24 hours on our website. So if you want to go back and rewatch the whole thing tomorrow and have an awesome holiday season, that's all up to you. And we'll just jump right back to Stacy.
Thanks, Nick. And yes, watching this over again might be a good idea. We're going to try to move as fast as we can. There were a lot of pages. You've probably seen, 5,600 pages almost that we skimmed through. A lot of it was actually the funding bill, but on the COVID side, we tried to make sure we didn't miss anything. So we've got a lot here for you, and we hope that it's helpful, but know that we're moving at a pretty quick pace. I will be going over the changes in the accounting that you need for the existing PPP loans. So those of you who already had them, and give you the great news on the deductibility of PPP expenses. Talk about the PPP second draw loans. What this is you get to apply again for a second round if you were negatively impacted by COVID with your business. Go over the stimulus checks, which seems to be a big holdup with President Trump signing the bill. talk about that EIDL and the changes that we're seeing there. And then I will be glad to bring Chris in and he will go over some payroll related changes, a big change with the employee retention tax credit, which is going to be huge for our small businesses. Talk about some other things that we went through in the act that we wanted to share with you, go over the filing of your 2020 tax return since that's right upon us now. And then give you some next steps. What do you do as an individual and a business owner? And then closing thoughts and how we can help you. And as Nick said, go over that Q&A. So we'll be presenting about an hour and then give about half hour for Q&A. So with that, let's jump in. The changes to the existing PPP, as I said, this is for those of you who got that first loan. So biggest news is line 1, right? IRS came out in early summertime and said, nope, you don't get to deduct those expenses. So if you're using it for payroll and utilities, rent, you have to add that back. Nope, Congress didn't want that. And good news, they've got it in this bill. Now we just have to hope the bill passes. So in the meantime, don't take the money out of the bank and go on a trip because everyone needs it, but still hold those funds just in case the way we did your tax plan is that it doesn't become deductible. So but we are all hopeful for that great news. And then they created an expanded use of funds. So for the first PPP you got, we all knew those rules and what we could use it for. Good news is they said, oh wait, now you can use it for PPE that you needed to buy for employees that you shouldn't have before. You had to do facility upgrades related to COVID. You can use it for that. You now have people that don't get to come into the office. You sent everyone home, so they're teleworking. You get to include costs related to it. And then for any property damage due to the civil unrest that we've seen all over the United States, and especially in Minneapolis, for those businesses hard hit, they can use those costs. And then covered operations expenditures and supplier costs. Again, a lot that go into those buckets. So if you're uncertain, do please ask. And now the payroll costs, they added group life, disability, vision, and dental insurance. So it's actually, if you didn't include those the first, or we couldn't include them the first round, they now get to be included. So I'm going to talk a little bit about new changes in the bill on the next slide when we get there. And then that EIDL advance that came late, right? We should have gotten the 1,000 or up to 10,000 before the PPP. The SBA did not get that done. So that came after the fact. And everyone said, well, you're going to have to pay that back because you got too much in the PPP. Good news, this bill says that does not have to be paid back. So we are very happy to see that. And the waiting on if you should file for forgiveness or not, we have been talking about this $150,000 level for loans at that amount or less. Good news is they got that put in, that it is now a simple form. The SBA will have 24 days after the bill gets enacted to get that form ready. So we'll be sure to be watching for that for you. Additionally, everyone that had that first round loan can now choose 24 or 8. And some of you might not even remember this, it might not have affected you, but the first few got put into that 8-week period and then could choose, and others were not able to choose the 8 weeks. So that's just a change if needed as you go into the forgiveness. And now, as I talked about, right, we had those new expenses that could be put into payroll costs. You can actually now recalculate that original PPP loan amount for the all rules that have changed, either on the interim rulings that came all summer long that we were updating you on, or this new bill, and go back to the bank to get additional funding. That's going to take some time. The SBA has to be ready for that. The banks have to be ready for that, but we wanted to at least bring that up since it was part of the bill. And then some businesses were like, should I keep it? Should I not? They were paying it back. If you now know that your business really did need that and was greatly affected, you can go back to get that first round PPP loan. And then for anyone who's part of or knows a 501c6 organization, in the first round, they could not get the PPP loan. They now can. There's a bunch of stipulations, but same thing, we're glad to help you with that. So now let's talk about some accounting. This one, everyone might get a little bored with and have questions, but that's okay. Let's at least put it out there for you. So as you were using the money during 2020 and recording your expenses, you were debiting that expense and crediting cash, and you had got the initial deposit for the loan that should have been put on as a long-term liability. So we're getting a lot of questions on that. So we thought we'd go through that again. And now once we get the forgiveness letter from the SBA, and granted this was, for some you already have it, some it'll be early next year or even into summer. For income tax purposes, what we want you to do is record the debt forgiveness income to wipe out that long-term liability. So you'll end up debiting the PPP loan liability and then crediting an other income account for that debt forgiveness. And we want to try to do this as of 12/31/20. And I know this sounds weird because it's going to be 2021 when we're dealing with this. So just be prepared. Your CPA will be working very closely with you, but we may need to get the return ready to go, but get it extended until we know what our forgiveness is. So again, we'll watch that closely and make sure we're guiding you on that. So you don't have to worry about it, we will. And then another great thing is that that PPP debt forgiveness income is not taxable. So we're going to have a book tax difference, it's called. So your books will show that income, but your tax return will not. And again, we'll be helping with that on your return. And then that brings us into more accounting now on the GAAP basis. So I talked a little bit about tax basis on that first slide. So for those of you who do it on GAAP, there are 4 methods of how to account for it. I have 3 on this slide and 1 on the next. And so we have the FASB ASC 470, which is more like a debt. So you're going to keep it on as debt on the books, and then your income will be recorded once you have that letter from the SBA that they awarded the forgiveness. Some may do the FASB ASC 958 for the not-for-profit entities. So it's more like revenue recognition. Initially, you'll same thing, have the debt on the books, and you'll release that in income as conditions have been substantially met. Again, we're here to help with those accounting rules. And then the International Accounting Standards came out with IAS 20 for the for-profit entities accounting for government grants, which is really what this PPP is. So initially recorded as debt and then recording it into income as it's reasonably assured. And again, here's where we'll help you with what makes substantially met and reasonably assured for your business. And then the last one being the FASB ASC 450, which is the gain contingency model, which is allowed, but we're not expecting this to be used. It's going to be very similar to what I said on the first one. So again, there's 2 different, right? We have the for-profit and the nonprofit borrowers, but we're here to guide you through that if you have questions. So with the options being there, you don't have to do that on your own. We will definitely be here to help you. We just have to make sure we document what we decided and what the accounting treatment is for you. Now that brings me to, right, another huge thing that came through in this bill, which is that those of us who got first round PPP loans now can get a second draw, but they do have stipulations in there. First one that I've listed here, you have to have a 25% decline in revenue for any 1 quarter in 2020. What you compare it to is 2019. There might be some businesses that don't have every quarter of being in business in 2019, so we can walk through that and assist you. But you guys, the other one that we talked a lot about earlier this year when it all first came out is that necessity of the loan. So do you need that PPP to be able to operate the business and continue doing business? And a lot of times that 25% you might have that, right? And maybe 1 quarter was pretty bad, but then all of a sudden you went gangbusters and things turned around and are good. So we'd want to talk through that. A lot of the restaurants didn't have that be the case. They had the decline, came back through when they're open, and now are seeing a big decline again. So we're here to consult with you on that and help make that decision. Another stipulation, you have to have received and used the original loan. So if you didn't get the first one, obviously now is time you can go back and get that loan. And then the limits are much lower this time. You can only get up to $2 million per borrower for this second loan. The same calculation is going to be there for that 2.5 times the monthly payroll. And they're letting us this time use 2019 or 2020. We can't really think of a reason why 2020 would make sense when you're getting this, because business is down. More than likely you would have paid less payroll. So we can help with that. And then great news, you guys, we have a huge sector of restaurant brewery that Nick helps run, and that accommodation food services sector is going to get 3.5 times the monthly payroll. So we'll go through an example to show that difference. The difference on this one, you guys, is the period that we choose. Now we get to decide between 8 up to 24 weeks. So it doesn't have to be 8 or. We get to cut it off when we've used the funds, we know we can turn it in, and it allows us to lay people off if we need to, so we don't run up against those FTE reduction counts. This time, we can only have 300 employees. So if you have any clients that are a little bit larger and business is down, we will work with you and see if there's other options out there for you. We still have to have that 60% payroll spend, right, of the total money. There's still the FTE reductions. There's still the wage reductions. So it's all there. Still, we want to help you through that process. The tax-free forgiveness and the deductibility is in this bill up front. We're not going to be fighting back and forth with the IRS and trying to make sure we get something like this passed. Same thing with the simplified forgiveness under the 150,000. We have until March 31st is the deadline for applying to get your second draw of the PPP loan. And then the SBA will have 10 days from when the bill is enacted to implement these new rules, but it's sounding like they're pretty much ready to go. So we may see it happen pretty quickly once enacted. And then our example we thought would be helpful. So we are using a hair salon in this example with 20 employees. So the first PPP they got was readjusting your application. So in this, they'll apply January 5th to be approved. They get funded on the 8th. They have up to 24 weeks from that date of January 8th to spend it. And again, remember there's expanded uses this time. So they've got their payroll, rent, and utilities like the last time, but we can look at PPE modifications, any other COVID things, employees working at home, etc. And now for those restaurant owners, let's say same thing, they got 200,000 in the first round. They are going to get 280,000 for the second draw. So it really is giving them, extra weeks of pay. They may still be closed yet here, like here in Minnesota. So we're here for you, right, to consult with you and help you figure out how to use all those funds. And the stimulus checks, which created the ruckus last night as it hit the president's desk. He says, I don't want 600 per adult, I want 2,000. Where is it going to end up? We don't know. But at this point, as the bill's written, it's 600 per adult and dependent child under 17. So you don't get anything for other dependents. So college kids or 17, 18-year-olds that you're still claiming. And it has the same income limits. Obviously, it phases out faster because it's less money than the first round. So 150,000 for married, filing joint, or surviving spouse, the 112,500 for head of household, and 75,000 for all others. What it does is phases out at a 5% over these amounts. So you can really do that calculation. The IRS, I think, even has a calculator online if you wanted to go look at that. So the first stimulus, they used the 2018 or 2019 tax return at that $1,200, and then they had 500 per child. Now the second one, they're going to base on your 2019 return. So they will get recalculated when we do the 2020 return. We may want to do that wait and see game like we did for some of you over the summer, where we extended and waited to make sure you got the best stimulus you could. So just be aware of that. They're saying it's going to be faster. Mnuchin comes on and says, I'm ready. When this thing gets enacted, I can get it all done within a few days. So we're figuring maybe 1, 2, or 3 weeks instead of months like it was over the summer. Obviously, the paper checks will be the slowest. And then EIDL, something that's been around for a long, long time. This isn't just a COVID thing. It's the disaster recovery loans. The good news is, again, on that advance, where some of you, it was $1,000 per employee, where they just arbitrarily changed that because they ran out of money, up to that 10,000 that is now not having to be repaid. So that's great. The other great news on this is, let's say you only got 1,000 because they had cut the funding off. This bill says there's going to be a process created for businesses to apply for this advance again if they got less than the 10,000. There's not much there. So this one will be kind of a rush to the website to apply as soon as it's open to allow your business to get up to that 10,000, and that is tax-free money. So it'll be a huge benefit for you once it becomes available. And the income is not taxable, like I said, for your return. So it'll be a book tax difference. And now they have the targeted EIDL program, or the lending is there again, but they're being pretty stringent on it this time around. You have to be in a low income community. So with incomes only up to the $50,000, no more than 25 employees, and the government can't make anything easy. This one has to be a 30% reduction instead of 25. So if you think you're eligible for this or have questions on it, do reach out, please. And those of you that have the EIDL loans, they are pretty stringent on how you can spend the money of your business, making sure you're not doing dividends or distributions or draws unless you're getting prior approval. And they're going to be looking at these pretty darn close once they get time. Obviously, they're buried right now. And with that brings us to Chris, who I know is super excited to see you all too, to get into the second half of the agenda.
All right, thank you, Stacy. Payroll related things. This is sort of a catch-all for, there's a few items related to sort of payroll. These are not, I don't think, huge items for a lot of people in terms of complexity for implementing them. But the federal unemployment benefits, they are extended 11 more weeks. And this time around, it is $300 per week. Obviously, that's administered just by the federal government. That really doesn't have anything to do with like the business owner, but just be aware that, if you are operating at reduced capacity and so you've laid off some folks, they are going to be able to get this additional $300 now per week, assuming the bill passes, but that's basically going to cover sort of this first quarter of 2021. The deferred payroll tax, we really did not recommend clients participate in that program, so I really don't know that many did, but they pushed out those payments just a little bit. The paid sick leave and family leave credits, those got pushed out one additional month. But once again, you cannot double dip. So you can't count the same wages for the Paid Sick Leave Act credit and the PPP forgiveness. And that is really going to be a common theme, is that you can't double count wages. You can apply wages to one credit or the PPP or another credit, but you can't count the same wages to the same person for like 2 or 3 different things. This employee retention tax credit is another one of those payroll items, but it is really complicated. And I think it is really going to have much broader application than it did the first time around. So this ERTC, Employee Retention Tax Credit, has been dramatically improved. The big thing originally was you could either do a PPP loan or you could do the ERTC. And when we went through the math, 99% of the time, the PPP was much better. So people did the PPP loan, and you probably have no idea what this ERTC is about, rightfully so, because you were not able to claim it. The rules are different, and they are way better now. So the new rule is that you can do both. So all of a sudden, people need to be looking at this ERTC. You can do both, and you can do it retroactively into 2020. But as I was saying, like, there's no double dipping here. If you used the wages for your PPP forgiveness, then you've used them. And so you have to have additional wages or different wages to use for the ERTC. The rules, they've changed how you qualify as a business. Now you're looking at gross receipts decline of 20% instead of 50%. You're looking, or the business could be shut down by government order. Generally, I think there's quite a bit of overlap there between the ones that have been shut down and the ones that have their gross receipts being way down. But either way is how you qualify for this. The qualifying wages, they used to be 10 grand per year per employee. Now it's 10 grand per quarter. So the amount that you can claim for one employee has increased quite a bit just based on that. They've also changed the way the credit is calculated. It used to be 50% of those qualifying wages. Now it's 70% of the qualifying wages. So, I mean, basically, I would say 99% of the people listening to this couldn't even really consider the ERTC before. now you can consider it, and they've also made it easier for you to get it. They've expanded the amount that you can receive, and they've increased the credit calculations. So you'll end up with more at the end of it. This has also been extended forward, so for 2 additional quarters. So now we're looking at quarters 1 and 2 of 2021. This should also apply. So we both need to look in reverse, probably at like the 3rd and 4th quarters of 2020, but also we need to look forward and include this in our planning for quarters 1 and 2 of 2021 for those businesses that really have been hit hard. If you're sailing along and you were an essential business and you never got closed down and your revenue really never took a dip, then you still cannot use this ERTC. But for the hard hit businesses, for the hard hit industries, this is really something that they can look at now, and potentially, I mean, I think a ton of potential benefit there. So this is one example sort of put together. I think a typical kind of scenario is a restaurant. They might have 20 employees. They get a PPP loan in April. Realistically, they spend it in April, May, June. And so they've basically covered their payroll in the 2nd quarter in all likelihood. So they're likely to be still way down, at least if they're here in Minnesota, for quarters 3 and 4. And so I think they can go back and look at and potentially qualify for this ERTC in the 3rd and 4th quarter. And especially a restaurant would have a lot of employees that are relatively low wages. So 10 grand of wages per quarter is going to cover most, or at least many, of the restaurant employees. And so that's 7 grand credit potentially per employee per quarter. So, I mean, just a little bit of rough math here, and it's certainly a rough estimate, but I mean, I think you could see a situation where the ERTC is potentially as much or more than the PPP was that they maybe got back in April or May. So, I mean, that's when we say this is worth looking at again, this is the reason why. It's not you can collect 2 grand of tax credit, which would be nice. This can really be significant dollars. The caution is just that it's pretty complicated to figure out if you qualify, then to figure out how much wages qualify. And I mean, generally, we don't love amending payroll returns. That can be kind of a hassle, but you know, if there's 200 grand or something like that on the line, it's definitely worth going through that exercise and going through that complexity to get the credits on the other side. A few other things to mention. There's $15 billion for this new grant program you've maybe heard about for the live venue operators. That'll be administered through the SBA. It'll probably take them a while to figure out how that new program is going to work, because that's sort of built from scratch. There's some money for childcare providers. There is some rent assistance and eviction protection thrown in there. And then something I thought was kind of neat. I mean, perhaps a small impact, but really a nice targeted thing is that you can now use your 2019 income to calculate some of the low income tax credits that require you to have earned income. So if you're like self-employed and your business lost money this year, you could actually lose out on some of these credits that require you to have earned income. And so they're saying, well, you can now go back and look at your 2019 return and see what your income was from there and use that in order to calculate these low income credits on your 2020 return. So that was definitely a cool thing, I thought. It was one of the things that struck me as actually a good idea. In a bill that had a lot of stuff in it. So a few of the other big items that were in the act. So if you have an SBA loan, a 7A, sort of a normal SBA loan, they had paid 6 months of principal and interest payments on those loans in 2020. So at the bottom there, tax-free, totally tax-free, great news on that. So that debt forgiveness income is tax-free now. In addition, they are going to start paying on those loans again, starting in February 2021. So they're going to pay 3 more months. And once again, that'll be that debt forgiveness income will be totally tax-free. And so that's great. Further than that, they're going to go an additional 5 months on a sort of a subset of these hard hit industries. It's going to be based on your NAICS code, and that's the code that just describes what your business is. And so it's really going to be targeted at like the arts, the hospitalities, the restaurants, stuff like that. So for those folks, they can get their normal SBA loans. They'll get 3 months that starts in February, and then they're going to get 5 months beyond that. If you were starting a new business, there will be 6 months of forgiveness on any new SBA 7A loans. And then this time around, the payments are limited to $9,000 per month. So it just depends on the size of your loan. If it's less than that, the monthly payment, it'll be the entire monthly payment. And if it's more than that, it'll just be limited to $9,000. So again, this is great news, great relief for the existing SBA loans that are out there. And just like the last time, you don't really need to do anything in order to get it. They're just going to start processing this. Instead of withdrawing the money from your own account, they are going to make the payments for you. So of all the things in this bill, this is like the one where you don't really need to do anything and you'll just get it. So that's great. There were a bunch of extenders, and extenders are a lot of things like energy credits and things that expire all the time. So there are a bunch of extenders for some were 2 years, some were 5 years. Now there's a bunch of stuff that's going to expire in 2025. One of the things that I think is worth sharing is the 179D deduction became permanent. So it's no longer one of these extender items. It became permanent, which is tremendous. And that is a deduction that generally like an engineering construction company would get for creating energy efficient or working on energy efficient projects going forward. So that's now a permanent part of the law, and it can be a tremendous deduction if you work on those types of qualifying activities. Something, again, to sort of try and get at the restaurants, which have been very, very hard hit, is that business meals from a restaurant, they can now be 100% deductible going forward. So only in the 2021 and 2022 years. So this does nothing to change your accounting in 2020 for the meals and then the entertainment, but going forward, again, this just leads you to, you really need to be sure you're separating the meals from the entertainment. The entertainment is still 0% deductible, but now these business meals at a restaurant are going to be 100% deductible. So they're just trying to encourage you to go out to a restaurant and write off that business meal. You still need to have documentation. This is something they're always looking at, but keep your good documentation, but then you will get 100% business write-off for it. There were some changes to charitable contributions. If you're not itemizing, there's this $300 or $600 if you're married filing joint. That's going forward. There's some other rules easing some of the limitations so that you could claim up to 100% of your AGI and charitable contributions. So just note there are a variety of changes to those charitable contributions. The point is you will be able to deduct more potentially than you were otherwise going to be able to For HSA and FSAs, you're really going to be able to carry forward those benefits now to 2021. So they're allowing a little bit more of the carryover of those funds to next year. So that was a bunch of sort of a lot of random smaller things in the bill. And now we're starting to think about, all right, going forward, how do I need to think about this in terms of filing my 2020 tax return? So first, I would say in general, we would recommend in most, if not all situations, you really need to wait until the SBA forgiveness is granted on your first PPP loan before filing your 2020 tax return. And one of the reasons for that is that I think it's going to be very important for basis reasons to get that debt forgiveness recorded in 2020. The law, a little bit unclear on this still, but at least my feeling is that I think in most situations you can record it in 2020. Potentially it would be different. As Stacy was going through some of those accounting, you could potentially get a different answer for audited or reviewed financial statements. But certainly for most of the small businesses, I think that's likely to be in 2020. But I think the point is you're going to want to wait until you get that answer before you go ahead and file your 2020 return. So I am expecting a lot more extensions, because I mean, I know some people have already gotten their forgiveness on the first round of PPP, but a lot of people have not gotten their answer yet. A lot of people have not even applied yet, which is totally fine. That's totally great. And there can be some good reasons to wait on applying for that forgiveness. But if you apply for the forgiveness in January or February, there's a good chance you will not have your answer from the SBA until April, May, potentially maybe June. Just depends on how bogged down the SBA gets. The bank has 60 days and then the SBA has 90 days. So it's really a wide window of how long this forgiveness process can take once you submit it to your bank. And if you submit February 1st, I mean, I really don't know. I would say a low chance you'll have your answer by March 15th when most of these business returns are done. So an extension would be done. I would anticipate we'll be preparing these returns, getting them ready, and then extending them and waiting to see what the SBA, waiting until you get that final guidance from the SBA that you're good to go on the forgiveness. There's no official rules or guidance on this yet, but I would expect delays in the IRS accepting returns. I would expect delays in them processing returns. So a lot of the things we've talked about are going to end up in your tax returns, and especially some of the stuff where you can, I mean, we'll need to recalculate everyone's stimulus checks. We'll need to have the IRS be ready to recalculate some of these low income credits based on 2019 income. Like, that's a new concept. They haven't even passed this bill yet. The IRS needs time to implement changes. So I would expect a delay in accepting the early returns, and I mean, potentially delays in processing the returns. I know in dealing with the IRS, we've really seen them continue to struggle in terms of responding to IRS notices, responding to anything in the mail. It's really been a challenge. So I don't think they're caught up yet, and I would anticipate filing 2020 returns to potentially have lengthy delays. So I would just be prepared for that. Definitely, we want to be recalculating that first and second stimulus checks when filing your 2020 tax returns. So you need to know the amount of the advance credit that you received for both of them. And then in many situations, you're going to want to wait to file your 2020 return, potentially until you have actually received that second advance stimulus, so that it can be recalculated on your 2020 return. And so just a lot of thinking to do there. And really, I mean, this law hasn't quite passed yet. There's going to be a lot of guidance from the SBA. There will be guidance from the IRS. I think you want to be sure that you understand the impact of this bill on your tax return before you go ahead and file it. There's typically no advantage to rushing, and you really don't want to miss something because you were a little too eager to get that return in. So for individuals, the next steps, we're really looking at, after they pass this bill, stimulus checks should be coming out. Direct deposit will be first. I mean, Mnuchin says a few days. I don't know if that's realistic, but certainly a week or 2 or 3 weeks potentially. The mailed checks will definitely take longer, but you would think that they maybe have it figured out now after, you know, the first time it took 3 months for some people to get their checks mailed. You want to continue to apply for the unemployment, especially like the self-employed people, and just continuing to work through that unemployment if that applies to your situation. Be smart about when you file your 2020 return. Certainly you want to incorporate all of these benefits and all of this relief stuff into your 2020 return, but then you also want to be smart about when you actually pull the trigger and file the 2020 return, because in some situations, again, while we're waiting for the forgiveness, we may want to extend and wait on those. If your income is very low, this year in 2020, with everything that's happened and the PPP being tax deductible and tax exempt on the income side, I mean, you might not have any earned income this year. So look at if 2019 could yield a better result, and certainly expect delays when thinking about the processing of these 2020 returns. For businesses, if you have experienced a quarter, or if your business is really being hurt by COVID, please be looking at a second draw loan. I think this program is likely to open up relatively quickly. They gave them 10 days. They may not even need the full 10 days because it really, in many ways, is similar to the first PPP. So, I mean, initially there were a few people were thinking it might even happen before the end of the calendar year. Now, with the delay and maybe getting it signed, that I don't know if that's on the table anymore, but like the first week in January, I do think you could see these PPP second draws start to get fired up. So I think you need to be thinking about it proactively. We really don't know how long the money will last, but we've seen it go quickly in the past. So I just think you want to be aware and be intentional about getting after it. If you are one of those hard hit businesses, really taking a good look and seeing if you're going to qualify for this second draw. Perhaps the highest priority, I would say, on this whole thing is this EIDL grant, or that advance. If you got the full 10 grand before, you can ignore this. But if you got 6 grand, you can reapply for the other $4,000. And based on what I've seen in the bill, it doesn't seem like there's enough money allocated to this. So I do think this money is going to go quickly. And we're not sure how exactly yet you're going to apply for that, but when that application is out, we want to be sure that you're getting in line for that. The EIDL loans, definitely be taking a look at. If you didn't get one before and the business is struggling, you can still get one. But then, you know, the reverse is true as well. If you got one in May and now your business has experienced really no decline, as it turns out, and you've made it through this whole thing well, that's great. I think you should really look at, do you want to repay the EIDL, because as Stacy was discussing, there are some stringent rules about you can't do distributions without the SBA's approval. And so you might be better off just paying that back. It is a moderate interest loan, but these EIDLs are not going to be forgiven. And so if you don't need it anymore and you're pretty sure you're going to get through the next 6 to 12 months okay, because your business has leveled out and you're doing all right, I do think you want to consider if you want to pay back that loan and just the timing of when you want to sort of give that cash back to the SBA. Certainly businesses now can definitely be looking at applying for that PPP forgiveness on the sort of the round one, so to speak. And if you're under 150,000 of PPP loan, you might want to just wait for those simplified procedures to come out for you. Otherwise, the bigger ones, I mean, I think we really have the guidance on, we know we're going to get the deductibility, so that's great. I know some people were holding up on that, especially if you were looking at an R&D credit or you had QBI issues. So I think those people can definitely go ahead now and work on those forgiveness applications. I don't think there's any rush on those, but certainly I do think it's worth working on them and making sure you're doing that properly. The deadline for those forgiveness applications is 10 months after your 24 weeks ended. So in most situations, the earliest is going to be like August 2021. So again, there's no rush, but I definitely think as we get into the new year, we'll probably see quite a few more businesses send in that forgiveness application. If you are one of those hard hit businesses and you're gonna do a second draw fund, a second draw from the PPP, really plan out the use of that and understand what the new uses are. It's nice that the uses changed for the first one, but I mean, realistically, all that money, you've probably spent it already. So I'm not sure how much good it's really going to do you, but definitely on the second draw, it can help as you can sort of keep track of those other types of expenses. Look at your 2020 tax planning. We got the deductibility on the PPP, which is great. But if you're going to do a second draw, like now you know you can get that deductibility on the second one as well, which is going to be in 2021. So you really want to look at those 2 years of planning together, if at all possible. You want to be going back and looking at ERTC if you were hard hit. If business was great and you're 100% revenue every month, the ERTC is not going to be for you. But for those businesses that were hit hard, you can go backwards now and look at 2020. And certainly you need to be, or you want to be monitoring it going forward. And then also, you know, just looking at what the local grants are available. I know there's some in Minneapolis, there's some in Minnesota, and there's some industry specific ones, certainly for like the live venues and the restaurants and et cetera. And so be looking at that if you're struggling. I mean, there's other federal programs we haven't talked about. And those are more grants or loans. Stacy alluded to some of them with the EIDL stuff. If your business is really struggling, there is a lot of stuff out there now. And new stuff is coming up all the time. So you really gotta, you know, sort of keep an eye out and see as that new stuff pops up, if you can qualify and get some of that to help you through this. Certainly we are here to help with a variety of these things, with most of these things. The forgiveness application, we've been working on a lot of those lately. Just making sure you have everything in order so that you can get that maximum PPP forgiveness on round one. For some, we're really helping you prepare it start to finish, and for others, we're just providing more consulting. The bigger loans, the loans over 1 million, the loans over 2 million have additional requirements. They have additional forms to look at. The SBA said they're going to audit those. So being a little bit more intentional about those and making sure all your ducks are in a row before you submit those. And then, I mean, we haven't done any of these yet, but I anticipate a bunch of clients are going to be able to get these second draw loans. And so we're intending to assist with figuring out if you qualify for the second draw loan and helping you fill out those applications, double checking to see whether you want to use 2019 payroll or 2020 payroll, and really helping you think through how am I going to then use this second draw money and plan for those things going forward. Tax planning is a big one. And then also there's the 7A loans, the SBA 7A loans and those EIDL loans, both sort of accounting for them properly and taking into account the tax-free debt relief on the 7A loans, and just seeing how that cash flow for your business is going to work. And I mean, it's certainly not something that Stacy and I are doing by ourselves here. So again, like here's the whole team. We're all working on this, and we certainly have other staff assisting us with these projects as well. So definitely reach out as you're working through some of these things and trying to figure out if some of this new stuff will affect your business, because there's a ton here. And I mean, the bill hasn't even been signed yet. I mean, knock on wood, we hope it will be very soon, and then we can really get going on getting this relief stuff in the hands of the businesses that need it. So, I mean, I think we pretty much covered the high points that were in the bill, but on the off chance that people have questions, Nick, have we left any people with questions as we've gone through this?
Yeah, a couple. Obviously, this is a ton of information to take in, and so much of it is just really good to clarify. So some of these questions that we did leave out there, we may be covered, but it's just so good to hit those again. And I can absolutely tell that Stacy is sitting down in Farmington or almost Iowa, begging to get back on camera because she's clicking, I want to answer, I want to answer. So thank you for doing that, Stace. That helps me a lot, and welcome back. I'm going to just jump right in because we don't have a ton of time, or I don't want to keep all of you too long. But if a few people already have their PPP paperwork submitted and they reduced their forgiveness by that EIDL grant, will they have to reapply? Do we know anything about how that's going to work?
Well, isn't congressional bills fun, you guys? Let's change what we want to have happen moving forward, but let's not figure out how to fix what's happening in the past. My guess is it's going to take a couple of weeks before the SBA gets the money to the banks get it out to you guys as individuals. How is it going to work? We don't know. Should it happen? Yes. I would say, now that you've had this conversation with us, wait till the bill passes, which we're going to know. It's going to be all over the media that Trump finally signs it, if he does, or that it has to go back and be changed. Email your bank or the lending institution where you got your loan from, and they're the ones who you have to pay back. So please do reach out to them.
Good. The necessity for business operations line, it scared a lot of people in the first round, and obviously it's still there for the second round. Do we have any further clarification? Are there requirements or guideposts around that term?
So it's pretty easy, I would say, for our restaurants that are on here that maybe have buffet type styles is a good example, right? I don't think of, oh, I should call my buffet restaurant and order one thing. I like to go there and get a bunch. So they're trying, right? They're there. Their doors are open as it is right now, where people are coming to pick up, but the business isn't there. They're not able to meet their operating costs. They still can't pay their rent. That's not hard, right? It's definitely a necessity, or they're going to close their doors. Are there businesses that were down a little bit second quarter and now are doing okay? Is it necessary right now to get it? No, more than likely not. But has it declined again, and we need to wait until the books close for December, and we're going to see a second quarter that's down, and we are looking at first quarter 2021 saying, oh my gosh, our pipeline's empty? So there's not one good guidepost, right? It's each business needs to look at their big picture, what's happening. And if it's needed, you know it, as that business owner, that I need this money. So I guess that's my best advice on that necessity piece. And honestly, the whole team is here. We have all of our contacts for you to reach out and ask. We're glad to help with that.
Sorry, my screen just started moving a lot. Can the second round of the PPP draw be used to pay for past COVID upgrades and expenditures?
And that question I wanted to bring into this because we didn't talk about that paid or incurred again. So the COVID upgrades to buildings now are listed and can be. So if you're getting that second round and have money to spend and you're paying for those, that is an accepted cost that can go into this. And we just have to watch out again, right, for that 60% payroll, 40% other costs. So that's why Chris was saying, let's just make sure we kind of plan out what the second round is going to be so that we stay within those parameters. If that bill is already paid and we took care of that in our last month, let's say the PPP round 1 was already used up, we paid it, and then we get round 2, it won't count because it won't be something we've paid. Nick, I love your smile.
Chris, did you want to jump in? Sorry, I think Chris wanted to jump in. He unmuted.
No, I'm just
is.
getting ready.
Oh,
So
okay,
I'll stop
good.
clicking
Sorry.
on the slides inadvertently.
Yeah, stop moving it around so
know,
much.
sorry.
You're throwing me off. So back to Stacy quick. Can you go over the 25% reduction again? Is it a specific quarter? Is it year to date? Can you pick your quarter? How does that
Yeah,
work?
so I saw the question, and here's where, and it's a 30% question, and I get it because they do the EIDL, you have to do that 30% reduction. In the news, they've talked about 50%, 30%, 25. So it really has been a whirlwind of where are we at. So PPP draw to you guys is that 25% number. And it's a quarter to quarter comparison of 2019 to 2020 if you were in business last year. So if this is a question from someone that's like, wow, I wasn't in business last year, I started my business January 15th, what do I do? Then we get to use different parameters for comparisons. As long as you were in business February 15th of this year, you're eligible. So then we're going to compare to that first quarter of 2020 with the other quarters to calculate our reduction. So again, there's a lot of moving parts here, but for those of us who were in business all last year and 2020, we're going to compare to the prior quarter. There was another question, I think, on this reduction of our receipts. And what if we had a big receipt in 2019 that is out of the ordinary, normally not like business? There's nothing in the details now. It's just your receipts. So I think you look at that and then talk to whoever's on your team here at Boyum or your CPA somewhere else, talk through that, see how you feel about it. And is it still necessary that you get PPP round 2? So I hit a couple of those questions that tied together on that, Nick.
Awesome. So I'll give you a quick little break and come back to a few more of yours that you want to answer. Chris, do we know anything about the documentation to show the 25% drop quarter over quarter?
Not specifically, other than they have said you're going to need to provide it. I mean, I would think you're going to need to have financials done quarterly, and I mean, I would assume they'll be on cash basis if you're a cash basis taxpayer, accrual if you're accrual basis taxpayer. So they've said you'll need to provide them, but they haven't said exactly what that is. So I would expect just a P&L and a balance sheet for each quarter, like in 2019 and then in 2020. And in some situations, there's with seasonal people, there are a little bit different rules, and there's different rules if you weren't in business all of 2019. That stuff can get a little complicated, but I'm expecting just a full set of financials that are done on a quarterly basis would work.
And tying right into that, there's been a lot of grants and the EIDL advance and other things that people would call other income. Mm-hmm. Is that going to be used in the 25% drop comparison?
We're not sure. It very well could. I mean, I could see a pretty strong argument for really either way. The timing of when those get recorded is a separate problem, potentially, because you might have some issues about like, well, when do you record the debt forgiveness on that PPP? Like potentially in which quarter do you end up recording it? Because that could swing things. They really haven't gotten into that. That would be one of the types of things I would see in some of the SBA guidance, which might be a while potentially. But like the last time the SBA did these PPP loans, they ended up with, was it 30 or 50 like frequently asked questions and IFRs, which are their term for this guidance. So, I mean, we could easily see 20 or 30 more of those sort of explaining the nitty gritty of how they're going to interpret some of these items.
Perfect. So there is currently a $2 million related entity hurdle for PPP loans. Has that changed for round 2?
No, but I mean, the 2 million number on the first round is really, they're saying, if you have more than 2 million, we're going to audit you. And so the second draw PPP loan, the maximum you can get is 2 million. So they haven't really said they're guaranteed to audit anybody on the second draw. They did lay out a plan that basically pushed it back on the SBA and said, I think they had a couple of weeks to figure out what their audit plan was gonna be. And so we don't know what level of like guaranteed audit you'd be looking at on these second draw loans. But like in theory, a business could have gotten a $4 million loan on the first go. And if they qualify on the second go round, they could get another 2 million total, but not more than the 2 million because there's the lower limit this time around.
Okay. Is there any difference in the ownership rules for the second draw? And can you just briefly touch on those maybe for the, I think it's probably for the forgiveness side of things, but I'm not positive.
Well, there actually are a few ownership changes, but they are pretty narrow. The only change I'm aware of is that if you have Chinese like nationals that own a part of your business, you're not going to get one of these loans. So other than that, fairly narrow subset of potential businesses. No, I really don't think there are other changes. They've made it clear that like publicly traded entities are not eligible for these things. Right. So they've gone after it on the side of the necessity. And so they have clarified a lot of those things as they've gone, but they threw in some further restrictions on that stuff, but it's the kind of stuff that's obvious. So we really haven't dove too deep into it. If it seems obvious that you really shouldn't need the loan, then you're not going to qualify. And in order to even consider the second draw PPP, you got to have the revenue be, you know, a pretty good decline.
And sort of piggybacking that, and I think maybe just diving into the calculation of it is, if you are an owner of an LLC, so I'm assuming they're talking sole proprietor or a partnership maybe, how are they factored in the second round? And they were saying in the first round, the amount was limited to what they had taken out the year before. Is it still the year before calculation?
Yeah, so I mean, these second draw loans is either going to be your 2019 calculation again, which if you and the bank did it correctly the first time around will yield the exact same result. Or you can look at 2020. It seems unlikely to us that 2020 could yield a better result because your business would have had to been down in order to think about the second draw a PPP, but certainly for some of the businesses that like were newer in 2019, I mean, you can get some unusual circumstances, but I know originally the banks made a bunch of mistakes, especially with Schedule Cs in how they calculated these loans. And so, I mean, there could be some people with a different answer, but that's only because they got the wrong answer the first time. And many of those mistakes were on the banks.
Right. And so just to really quickly, probably a one-word answer is if you're a Schedule C, can you get the second round if you're working and your income's less than it was in 2019?
Yeah.
Assuming you hit 25% and
Mm-hmm.
Yep, great. Stacy, I'll have you come back for a couple more. And sorry, I know we're already over, so understand if people need to go, but just gonna try to finish out these last few questions that are already there. So Stacy, if if our first PPP calculation was underestimated, can we go back and apply for the additional amount that we should have gotten?
Yes. So, and I think, Nick, we actually put that we'd do a half-hour Q&A at the end of this one, I believe. Yeah,
wonderful.
I'm not positive, but I think we did tell people that. The great news is, Paul, hi, it was fun to see your name too, but for those of us that did the wrong amounts the first round, this bill says go back, tell your bank, get the right amount. So yes, we get to recalculate. And some of it's not even that we did it wrong the first time, right? There's those new payroll costs and other things that we learned through all those procedures that came through and questions being answered by the SBA. So there's could be some money on the table, but go back to your bank and get that money.
Awesome. And can we apply for the second PPP round if we haven't asked for forgiveness yet on the first or haven't received our answer yet?
Yes, and I wish I would have actually said that on the slide, so I was glad someone asked this. It really is just that you got the first one and you used up the first one. And I don't think anyone at this point with the 24 weeks, there's no way, I don't believe that you would, well, I guess the August still could be there, but so have to have gotten it and have to have used it, not applied for forgiveness. That was a great question. Thank you for that, Pam.
Perfect. One anonymous attendee was wondering on the stimulus checks, whatever they end up being, whether it's the 600 currently in the bill or the 2,000 that Trump wants, if they don't feel that they need it or they just don't want to use it, what should they do with it?
I liked this question just because I think there's a lot of people that are like, I don't need this, I'm doing fine, and others aren't. So the stimulus part is what this money is coming out to do is to stimulate the economy. And as depending on your neighborhood you live in, there may be businesses that have been shut down because of government regulations or nonprofits that can't have their fundraisers. And so I think, and you can use it the way you feel best, but it is charity, great idea, or one of those businesses who hasn't been able to run their business will be a way to stimulate that economy. I would not personally return it to the government, but that doesn't mean that you can't. But I would go use it to stimulate based on what the Congress wants us to do.
I agree. I'm probably in that same boat, and I would go buy gift cards from somebody that was closed down near you and give it to all your neighbors. If you don't even want to benefit from it, just stick it. Oh, you can't stick it in their mailbox. That might be illegal. I don't know. All right. Do you know, or how do we know when to use the short form or the long form? Is there a dollar value cutoff for the forgiveness?
Well, so the good news is we are getting that changed to the 150,000. So if your loan is below that but yet above, was it 25,000, you guys? Maybe a head shake. I can't remember what the initial amount was for the 50,000 for the initial form, 50,000. So if you're now between 50 and 150,000, we just need to wait and we get to use that short form. If you're over that, then there's a couple of forms to choose from as well. There might be an easy one if you didn't have any reduction in wages or cut in pay. So do reach out again to the team. Maybe Chris, could you put us on that last slide just for the last few questions in case people want to grab someone's email or phone number and ask? We can definitely guide you through that.
Awesome. If the EIDL loan funds, and this is probably for either you or Chris, if the EIDL loan funds have been dispersed, what recourse would the SBA have if the loans are not forgivable and the proceeds are used for an ineligible use? So actually, that's a good thing to step back to. What were the eligible uses for the EIDL? And what happens if either it was an ineligible use or distributions were taken? Like that was a big clause that scared a lot of us to advise most people to not take it. But could you just kind of hit onto the EIDL a little harder?
Yeah, so again, remember these disaster loans have been around forever and the SBA have been offering them up. What they did now is put in a COVID kind of piece to them, allowing them to come out as the pandemic being a disaster instead of being a disaster area. They want you to use that to run your business, you know, to pay for those business expenses, your cost of goods sold, your wages, rent, utilities, all the same as PPP stuff really, as well as being very careful then how you use the business assets. So it's not necessarily that you can't just pay yourself a dividend distribution or draw, but you can invest in something. You know, they don't want those funds used to expand your business or grow without asking them for the okay to do that. If you are in a position where you can do distributions and draws, they probably would say you're not in a pandemic place in your business. They're not going to know right away, you guys. What's going to happen is once that loan gets paid back, they're going to knock, knock, knock. Hey, SBA's here. We would love to see how you used this EIDL loan. You know, how are you using those funds? So that's where it's going to become an issue is down the line, not necessarily right now. If you're using it the wrong way and you're not going to have someone wanting you to pay it back right away. Chris, would you say anything that I missed there? I mean, it's really, it has to be your business is in a position that it needs the funds.
Yeah, I mean, just in terms of what recourse does the SBA have if you just totally ignore all the EIDL rules? I mean, they could certainly ask for it back, but in some circumstances, depending on the loan amounts, they potentially attached to some of your assets. And I mean, if you buy a yacht with it or something, they're going to come after you for obtaining a fraudulent loan from the SBA. I mean, I know there's some of these more on the PPP side have ended up in the news where, guy gets a PPP loan for his little business and he buys a Lamborghini with it or something. Like those guys are getting prosecuted. So there's always recourse if you totally flaunt the rules intentionally. But if you have sort of inadvertently done a distribution that you didn't exactly know was against the rules at the time, I mean, they're just going to ask for the money back. If you've made a small, not necessarily error, but a small thing to default on the loan, they're not actually going to knock on the door of your business, but they will ask for the money back. So, I mean, there's plenty of opportunity for the SBA to come ask for that stuff back.
I think another thing, Chris and Nick, that we should talk about on all of this, you guys, it's all public knowledge. It's getting put out there in front of everyone. And so guess what, we didn't all read that 600 pages. There's no way, we didn't have the time, but we did this whole scanning, right? The roller ball. So I looked at the pages. There's a whistleblower piece that they added related to this COVID stuff. And they're letting everyone know, hey, all of this is going to be put out on the internet. Anyone can find what businesses got it and how much they got. Please come forward. Tell us whether they should have gotten it or not. So it's no longer just private. No one's going to know. It's going to be that, person next door who's been jealous of your business and how well you're doing for years that all of a sudden it's like, I don't agree with this. And that could bring the SBA knocking on your door as well.
Yeah, probably just a few quick little mop-up items because there are only 2 questions out there. So if there are more, you can sure jump them in, but hopefully we've just addressed a lot of them already. Just to finish up that last EIDL conversation, using the EIDL funds to pay off other debt, was that an accepted use or was that something not acceptable?
Not acceptable. It was not a refinancing tool, right? That's what that is, would be refinancing other debt. And that was not purpose of the EIDL. It's really because your business would shut down if you didn't have it. and we need it to make sure we can pay our bills and keep our employees doing their work. So good question.
And realistically, if you've used it to pay off, you know, some other bank debt, and you've basically just refinanced your other debt, if the business is gonna make some money, because they must, because you didn't need it for the operations, then you're going to take distributions, you're going to end up in default, and you're going to owe them that money back. And you're essentially going to wish you hadn't paid off the original debt in the first place. So you really haven't accomplished much that's useful, I would say. I mean, the interest rate on these EIDL loans is okay, but the point is not to pay off my 5% loan and with a 3.75% loan.
Yeah, so probably final thing is sort of a compound question is, well, unrelated. So two quick ones. If you get the additional $10,000 from the EIDL, you do not have to pay that back. Is that correct? And it's not taxable?
Correct.
Easy. And then last one, on the FTE calculation, I know for the round 2, we can use the same calculation we used last time, or we can include some payroll in 2020. Will there be benefits to having less FTEs in our calculation, or how will that work on the forgiveness side?
I mean, the SBA will need to put out their guidance on this, but if you think about how it worked the first time, then the FTEs you had really have nothing to do with how much money you're going to get. It's the payroll during that time. And then the FTEs really mattered from when you got the loan to the end of the covered period. Like, did you keep those folks around? So I mean, they were measuring right before you got the first PPP loan and then through your covered period. So, yeah.
I think, Chris, though, wasn't it February 15th? I believe it's the
which
date.
is just sort of right before it
It
started.
was.
So they'll either go back to there or they'll go back to, you know, like right before you get this second draw. The point is they want you to maintain your people, but like these exceptions still exist. If you're a restaurant at 50% capacity, so you have 50% of the people around, that's okay if COVID is the reason. So I think it'll work out okay. Those FTE counts do not impact the gross amount that they give you in the first place. That is just based on the payroll that was paid, sort of regardless of how many folks there were. So, I mean, we don't know. We know that the FTE reductions still exist, and we know the wage reduction still exists, but they haven't said, and we know your covered period. I mean, there's some flexibility there between 8 and 24 weeks. So you can choose to cut it off at a time that's convenient for you in terms of looking at those exceptions. And I mean, we know how the math works on the forgiveness now. And I think for the most part, we've really seen businesses be able to manage through those reductions and not have them apply, because it's in your best interest to be as fully staffed up as sort of your operations will allow you. And that's what they want. If you're at 50%, that sucks. But if you have 50% of the employees, because you're being limited, then you're still going to be okay. So I'm not super worried about it. It's certainly something to keep an eye on, but not a huge concern, I don't think.
Good. And a wonderful closing question from May. I didn't even plant this with her. Will we be doing another update once rules are finalized?
Oh, we'll be doing a bunch, and we love being with you guys. I'm sure you can feel that with the team. You know, today I was so excited to get into it. I didn't even introduce anyone. I just assume you all know us. So we watch this daily. It's kind of a race as our team, like who sees the update first. So Chris is always the Twitter guy, and he'll be like, I'd hit Twitter and I was in this rant with Tony Nitty and this is what's happening. And then that's what helps guide us to when should we do another webinar for all of you. And then the same thing with the quick videos. We will do those. We will do blogs. So we are here to try to stay in front of all this for you. Always willing to answer questions and be here as you need us. And we just hope that you all have a wonderful holiday and a great 2021 to start, because boy, 2020 has been, I don't even know what to say, a ride for sure. And Merry Christmas. Yes, for those of you who do celebrate Christmas, have a very Merry Christmas and a Happy New Year. And you're welcome. I love all the thank yous, you guys. We're glad to do this. Glad you're here with us. And thank you all for being part of the Boyum team.
Thanks, everybody.
All right, bye.
Bye-bye. See you next time.